The SARB hiked rates this week, but this hasn't been enough to appease the financial markets. On Thursday, the MPC announced a 25 basis point hike in the repo rate, taking it to 3.75 and off that 50-year low. This is the first hike in the cycle, obviously the rates having come down at the beginning of the COVID pandemic. Given the hike, our research team at RMB now believes that the SARB will hike rates another 75 basis points next year, with another 50 to 75 coming in 2023. So overall, taking the repo rate to around 5.25% at the end of 2023. Effectively, we don't believe that the economy can handle more aggressive hikes than that. But despite hiking, the markets were not appeased. The markets were very worried by the dovish tone that the MPC took. There was various signs of it in the QPM, the quarterly projection model forecast. The future model trajectory of the repo rate actually came down marginally. No signs there that they're going to hike rates aggressively. Similarly, a 3-2 vote for a rate hike doesn't indicate a Reserve Bank MPC that is willing to hike rates very aggressively. Most importantly, perhaps, was an actual comment in the statement itself. Given the expected trajectory for headline inflation and upside risks, the committee believes a gradual rise in the repo rate will be sufficient to keep inflation expectations well anchored and moderate the future path of interest rates. So explicitly, a gradual rise in interest rates. Now, this is not enough for financial markets that are very panicked by the surge of inflation globally and the need for various emerging market central banks to hike rates aggressively to keep conditions under control. The market worries that the SARB is still too dovish, not hiking rates aggressively, and inflation is therefore going to surge in South Africa. As a result, we saw the FRA curve actually steepen after the event, rising around 10 to 15 points. Admittedly, a slight easing on Friday, luckily. Overall, though, this is not what many in the market had hoped. We thought a hike from the Reserve Bank might ease the pressure in the interest rate markets, and we might see the FRAs and the swaps coming back from the aggressive levels where they have been pricing. This has not been the case. Admittedly, swaps were not nearly as badly as affected as the FRAs. It's only really the shorter dated swaps, for instance, the three-year rate that ticked up. Nevertheless, swap rates remain very high, a very tough environment for our clients that are looking to hedge their interest rate exposure as we go into the hiking cycle. This week, we also saw a significant fallout in the Rand. The Rand coming under pressure from a stronger dollar, from emerging market pressures as Turkey's central bank cut rates aggressively, but then really decisively breaking that 1550 level after the Reserve Bank hiked rates, and we had that the dovish tone I've mentioned. So 1 year trend channel on dollar Rand has been broken decisively. Some even call this a 4 or 5 year trend channel. If we go back pre-COVID, dollar Rand had been in very similar ranges to what we've seen over the past couple of months. A decisive break. To me, this confirms my intuition that we're in a rising trajectory on dollar Rand. I don't think this is very aggressive. I do think we'll continue to see pullbacks as much as 1 Rand as we have over the past couple of months, but just fundamentally dollar Rand trending higher again. Commodity price coming off and the stronger dollar being key components of that. Certainly that commodity price decline is a slow poison for the Rand. If we look at the terms of trade, which is South Africa's export prices divided by our import prices, what we see is the very sharp drop off earlier this month, but then a continued slower but still ongoing decline in commodity prices. So one of the Rand's most attractive features, the strong support it's getting from commodity prices, has been abating. For the week ahead, it's effectively a short one, giving Thanksgiving on Thursday and then Black Friday, obviously on Friday. So all the US data, most events pushed forward into the week. The headline event of the week is likely to be President Biden's appointment or nomination of the next Fed chair. This was expected last week. It keeps being rumored that it's coming out. Current rumor is that it will be announced on Thursday. The two main contenders there, the reappointment of Powell. Powell's odds in the betting markets running around two-thirds probability. Outsider is Lael Brainard. She's given about a third probability by the betting markets, with numerous outside candidates really as tail events, 1% or less probabilities. Importance for the market: Powell's an established, safe pair of hands. Brainard, by contrast, is seen more dovish. If she does come in, we could see some volatility in financial markets, possibly a bit of dollar weakness and maybe some rand gains, but again, that volatility will be important. There's a lot of other moderately important events in the week. In South Africa, we get our RMB BER Business Confidence Index out. That's for the fourth quarter. Business confidence has been below the 50 break-even level for the past few quarters. Can we maybe see some improvement? Probably not huge signs of that. In terms of data, Eurozone PMI figures early in the week, and then that rush of US data on Wednesday. The key figure there is the core PCE inflation figure. That's the main inflation gauge that the Fed watches. Lots also on the policy front: Fed minutes, ECB minutes, and a continued string of ECB and Fed speakers. So watching inflation stats globally, watching policy in terms of who's going to be nominated as the next Fed governor, and then any indications of future policy by the various Fed and ECB speakers. In all, the SARB hiked, but this hasn't been enough to appease financial markets. Dollar rand breaking through 15.50, our interest rate markets still remaining under stress. Good luck for the week ahead.